Money mindset.
I think that sounds right.
Investing is like music. So that's the question. That's what we're answering today. Or that's what we're talking about today. So everyone today needs to be an investor, as we talked about in other videos. So my name's Neil Doy. I'm the author of Millennial Money Mindset. If you want the fruits, you need the roots. Creator of Football Formation, Asset Allocation. So please please subscribe, and please tell one person about this channel. We're going to give you one tip at the end that will really help your investing. So investing is like a band. So think of it like you want to have a team of assets that are working, playing for you. So each musical instrument has a different benefit or different strength or different weakness. So as they come together, they essentially create something better than the individual parts. So 1 plus 1 equals 3. That may sound bizarre, but that's exactly what investing does. So it creates something better than the individual parts. So think of having like a band. So I play bass, and bass is a bit like bonds, and bonds are really boring, but they form part of the band. Essentially, they're the heartbeat of your band. The bass is the heartbeat of the band. It's a similar to bonds. Like bonds are the heartbeat of your portfolio. So let's start. We're going to go through each musical instrument in turn, and essentially it's going to create something better than the individual part. So think of it with drums. So drums are usually how you start a song, the musical instrument. So think of it like paying yourself first. So drums can be annoying. If there was a drummer kind of playing in the background, it's going to be loud and obnoxious, and on its own it doesn't sound that great. And it's a bit like saving. Saving can be kind of boring, and I bang on about how it's so important to pay yourself first. And it's a bit like a drum, like the drummer. That paying yourself first every month keeps the rest of the band in time. So it keeps the beat. So if you pay yourself first every month, then it kind of keeps all the other instruments essentially together and part of the team. So you've got the drums are a bit like cash. So paying yourself first every month is the beat of the band. Then you've got the bass player. They're a bit boring. The bass players, but they're kind of the heart of the band. They keep everything together. They kind of tie up the rest of the band. And cash and the drums and bass player link up really well together, a bit like cash and bonds. So bonds are you're lending cash to companies, or you're lending cash to governments, and essentially you might not notice them in your portfolio until you actually need them. So until market crashes, the market's crashed recently, and bonds have kind of shown their worth because they're kind of steady, dependable, and even boring. They keep the timing of the rest of the band. So that's the drums, like cash. You've got bonds, which are like the bass player. Then you've got the rhythm guitar. So rhythm guitar, it's a bit like the rhythm of the market. So it's a bit like a tracker. So trackers, they go with they track the market essentially. It's a bit like rhythm guitar. So they go with the flow. They kind of flow with the markets, and they're essentially they go up and they go down, and they sound pretty good. Like the tracker can sound quite good, and then it doesn't really. They're not very creative. They essentially just go with the flow. It's a bit like trackers. They kind of go with the flow. Then you've got the lead guitar. So lead guitar, it's essentially they're the creative ones of the band. They kind of make things happen. They kind of go off in directions that you might not have kind of predicted. It's a bit like enterprising companies. So if you kind of buy shares that you think that are going to essentially try and beat the market, or buy in kind of sectors that you might not necessarily think would maybe a bit risky, but they kind of lead. If you buy in markets that are not necessarily the rest of the crowd are following, you can lead essentially you're going to make more money because you've led the market, and you're going to be buying at a much better price than the rest of the markets. This is the lead guitarist. They're a bit more risky, they're a bit more creative, they're a bit more dynamic, they're a bit more entrepreneurial. So they're a bit more risky as well. They're maybe a bit more, but they're a bit more flamboyant. But essentially they make your team they make it better. They kind of give a bit more flair and dynamic to your band. And then finally you've got the lead singer. So the lead singer is the crazy one who kind of holds the attention of the audience, and they essentially, when you go to a party, the first person you mention, if you're talking about a band, is usually the frontman, the lead singer. They're kind of big personality. And it's a bit like if you go to a party, who are you going to talk about? If you're talking investment, you may be talking about Bitcoin, the latest kind of craze, or you might be talking about cannabis stocks because they're kind of up and coming and they're kind of exciting, or you might talk about the kind of next big thing, the kind of big fad, like I'm trying to think, maybe CRISPR stocks, which are kind of like they're kind of genetic engineering, which could be massive in the future, or kind of blockchain technology, or the Internet of Things. These kind of things are exciting and interesting and kind of but yeah, they kind of hold the crowd in the palm of their hand. They kind of make things exciting. This is a bit like the lead singer, so this is a bit more like speculative stocks and speculative things. They're more likely to be interesting, and they're going to kind of make your portfolio much more interesting and make it more attractive. But then again, the lead singer are kind of much more likely to go off and get drunk and throw a TV out the window. And it's a bit like these stocks, these kind of Bitcoin and Internet of Things, or kind of CRISPR stuff, although they're really exciting and people talk about them, they're much more likely to kind of go out a window. Like, think of it like a stock falling out the window, like going up. The way markets move, they kind of go up the stairs and then fall out of a window. So they move up like that, then they fall down really quickly. Like when people get kind of a herd mentality, you get this thing called loss aversion, where people get scared and want to get out of the market quickly. It's a bit like the lead singer of your band. So people love talking about. It's annoying, but they keep time. They keep, every month they pay you an income into your account every month, and it keeps time, and it keeps the rest of your portfolio together. That's diversification. That's the best analogy I can come up with essentially having all these together as a portfolio creates something better than the individual parts. So my name's Neil Doy. I'm the author of Millennial Money Mindset. If you want the fruits, you need the roots. I'm the creator of Football Formation, Asset Allocation, and the founder of Money Tips, Tax, Investment, Property, Pension, Savings. So you're watching YouTube channel, Millennial Money Mindset. I also have a podcast called Millennial Money Mindset. Please like, please subscribe, and please tell one person about the band of brothers, the portfolio that's going to be better than the individual parts. Thank you so much, and yeah, if you want the fruits, you need the roots.
Money mindset.
I think that sounds right.